We have Jonathan Cheng with us today, who is going to tell us all about the stock market. Pretty big day on the Dow after a number of days where the Dow really went nowhere.
Right, and a lot of people were saying, look, this rally that we saw in January was running out of steam, but clearly it's gotten a new life. It's only one day into February, and February is not a great month for stocks, but this is a good way to kick it off. We had good economic data. Earnings were okay, and even Amazon's disappointment isn't really disrupting things.
And I would argue, which is interesting because we're going to talk about Amazon later. Amazon itself is down 10%.
Right.
I didn't think the data was all that good.
Sure.
I mean, we're talking about basically a lot of manufacturing surveys. Right. The ones in Europe are the ones that really started this.
Those are the good ones. In China, it was sort of mixed depending on who you trust and who you listen to over there. But markets were down there in Europe. Yes, we're getting a huge bump there. The DAX in Germany is up 2.5%. So, that's got to be a good thing. And
but my takeaway from January is the up days were fairly constructive, but the down days were, kind of non-events. I mean, the last couple of days, not big losses. Even if you were one of those people who said market's gotten a little bit overbought, and we're starting to run out of steam, you weren't seeing the volatility.
Well, and it was weird. I mean, you saw this yesterday, the day before. I mean, several days where in the morning stocks were down, almost 100 points. You see the Dow down.
Ugly.
By the afternoon, the Dow was down 13, down 20, down 2.
Well, don't speak so soon. We don't know how this day is going to end too. I mean,
that's
we may
very
start
true.
up
It is only
150 points, and who knows? We might have one of these ugly finishes.
But the absence of volatility has been remarkable. We've talked about this for the last couple of weeks. The absence of volatility has been one of the signature sort of characteristics of 2012.
And the most pleasant surprise for anyone who came out of 2011 with horrible nightmares and bad premonitions what we were going to get.
Well, we'll see if that turns into. I know sentiment has picked up. Individual investors are feeling a little bit more constructive, or at least say they're feeling a little more constructive. We'll see if that turns into actual inflows.
That's right.
And then another thing I want to point out today is we have auto sales. It's the first of the month, so we're getting the January auto sales, and they look pretty good so far. I mean, Chrysler came out. Their sales were up 44%. I mean, look, probably from a low base, but a big
coming
jump.
Off of, you've got an easy comp.
Fords were pretty good, 7.3% rise. These are January sales. GM, I don't think GM's hit the tape yet, so we have to wait for that. But look, for the automakers, it's a pretty good January, pretty good start.
And consumers, that's the big question here. It's Amazon, and we saw the consumer confidence number yesterday, and both of those were a little shaky, but clearly people are spending money somewhere, and that's a good sign.
And the European economic data is very, very encouraging. If your hesitation is that the biggest overhang on this market right now is that the European economy is going to go into a double-dip recession that's going to get exported around the globe.
Well, and I got to issue a note of caution here. And we got this the ISM manufacturing survey today here in the U.S. Again, for January, it was up a point to 54. Good numbers. Keep in mind, these are private surveys. They're diffusion indexes. They're not measuring an actual level. They're measuring movement. And the European ones, I mean, you're still looking at numbers around 50, under 50. I mean, Europe is still entering a recession, I say. That is a note of caution, despite the fact that the stock market's taken off because of it.
And again, just keep in mind that expectations have come down far enough. I mean, they're creeping back up with what we've seen over the past few months. But look, I mean, the ADP number this morning is still about a third of what we had in December. So, I mean, it's just that people weren't expecting a repeat.
The trends are in the right place. I feel that the trends are going in the right direction, even if you're not overwhelmed with the scope of the moves.
Sure, you can make
the direction. The direction's right. Don't get both the direction and the velocity in the same pick.